High quality support and resistance, higher time frame levels. The higher the quality of a support and resistance level, the higher the chance that price will actually react to it. Meaning when price approaches a very high quality support and resistance level, the trade is of extreme interest to us. High quality support and resistance levels fall under two main categories. 1. The level is stacked with multiple traits that make it a support and resistance level. The same traits we told you to look for in the previous section, extreme swing, high-low, move away, was drastic, recently formed, etc. The more these traits that the level has inside of its makeup, the higher the quality of the level 2. Found on the higher time frames, visually obvious and can actually be identified, seen on the weekly or monthly time frame, make it a very high quality level. And when we approach this level on the lower time frames, we know there is a very high chance it will react to it. Great for quick bounce entries, even before you take a true reversal entry. So things you find on the higher time frame holds more weight, specifically weekly/monthly time frame. This also means that the support and resistance levels found on a higher time frame are of high quality. There is a high chance that price will react to them, meaning they won't always be a support and resistance level available to you or in play, and that is perfectly fine. You don't have to use the high time frame leveled, but when they are all available to use or in play, meaning you are hitting an S/R level or close to hitting one or breaking through one, these trade opportunities becomes of high interest to us. So here is the first key to finding dynamic support and resistance, which is through 1. Using the higher time frames, meaning the weekly/monthly time frame. As a reminder, the weekly time frame represents a week time. A monthly time frame represents 1 month time. Here is the key, and make sure you remember this. If you can spot the obvious support and resistance areas on a weekly or monthly time frame, then you can begin to see the larger picture as these areas of support and resistance that are clearly visible on the weekly and monthly holds more weight and strength. Example, as you can see on a daily time frame, there is support and resistance everywhere. Now, I'm not saying that these areas are invalid, as we do use them in our strategies, but what we want to focus on is the main dynamic support and resistance, because we always want to have a bigger picture in mind. And now what we are looking for in a monthly time frame is support and resistance area that are very obvious, meaning that a lot of support and resistance that is visible on the weekly and monthly. So we are looking for the visible and obvious levels that show themselves on the weekly and monthly. Right away, look at the top. You should be able to spot the 4 rejection right away. Now look at the bottom here. There is a recent swing low, and it also acted as resistance twice here on the left, and then this level there, it acted as support as well. I also like to make my line as specific clear to represent them as monthly or weekly level, so that when you jump between levels or go back in the daily, you will see the lines join in or know where they came from. Now that we have the monthly support and resistance area plotted, we will jump down the time frame to the weekly to fine-tune these lines to incorporate for the weekly time frame. Weekly time frame, notice how well the line we drew in on a monthly appeared on a weekly to give you a better insight and to reveal a multitude of rejections. Now here on the weekly, there are some levels that aren't visible to the monthly that are only visible to the weekly, as you can see from the rejection here. And I have seen another level of support here, which is an extreme swing here, of which price got to recent time. Once we go down a time frame, you will see a vast amount of resistance and support area, but you won't know where the key lines are. So now let's jump down to a daily time frame. So now on a daily, you can see why we choose to color the lines, as they remind us where it came from, whether it was the weekly or monthly. Now let me make something clear. This does not mean that the daily support and resistance level are invalid, but we use this method as a scaling technique, meaning we put more emphasis on price levels from the monthly and weekly as they act as dynamic support and resistance levels. Now on another period, you should be able to spot this right away. Here they act as support once and as resistance 5 times at the bottom. Now let's go to weekly time frame. Notice here on the weekly how clear and obvious these levels are going from a higher time frame downward to help filter out all the noise on the chart to focus on the key areas which are the most important. We don't just take trades at these levels, we use them as guidance, and we still need price action with confirmation and strategy before entering at these levels. Monthly. Here we draw in obvious monthly levels. Now these are all correct, but we want to keep our chart clean to